I get a lot of questions. Why did you start this backtesting session? Why do you really think we should backtest? Well, my video today will come to challenge that, because backtesting should be the first thing that you do. As a beginner trader, it should be the first thing that you do as a trader. As a beginner trader, it should be the first thing that you do, because it helps you to know which settings you have to tweak around so that you can actually find a strategy. Because as a beginner trader, you will need a strategy, and it's only group backtesting is how you're going to find this strategy you're actually seeking for. And as a professional trader, you need to backtest over and over again so that you can see if your edge is still working in the market, or to see which rules or condition to change so that you can actually get a strategy that is actually profitable in the long run. Let's go backtest. Before we start our backtesting, you can see right now on the screen here that I'm using fxreplay. Wait. Yes, you heard that right. We're using another backtesting software. Before I was just using TradingView to backtest, but right now we're changing from simply TradingView to fxreplay. So after that being said, let's go and start our backtesting. Let me create first this session here by the balance, the pairs, and remember right now we're backtesting the month of May. We have already backtested from January to April. If you want to see those videos, go on my YouTube profile. You see all those previous videos there. So let me set this up and we start our backtesting as soon as possible. I've already set in the session. You can see we're going to start here from 8th. You will see on the calendar that the date from, let me actually go in the calendar, the date from May 1st, from May 5th, this is the NFP week, and we will not be looking forward to trade on these days. So the only valid day to trade here will be on 8th. That's why if you go here on the fxreplay, you will see here that I have put that our trading session, we will start from 7th May to 1st June, but then this is not going to be 1st June, it's going to be 31st of May. So let's go to the calendar. First we start with the daily, and you see if our daily restriction or if our daily rule is actually being respected. Going to the daily, you can see here this is 5th May, and remember our daily rule states that if you're looking forward to trade on a day and which your bias is actually bullish, the previous daily candle should have closed bullish for you to actually look for bullish confirmation in the M15 on that specific day. So on this day, we're looking forward to trade on 8th May. So it means if 8th May here is on Monday, meaning that the previous candle is on Friday, which is 5th May. So it means that 5th May should have closed bullish. And you can see from here, this candle actually closed bullish, which this gives us a go ahead to actually go in the lower time frames, which is the 15 minutes time frame, to actually look for entry. So let's go to the M15 and look for entry. We're here in the M15. Remember, the first thing that you do is measure the impulsive move. Remember, you measure the impulsive move using the swing high and the swing low. You take this measuring tool and then you measure from down here to up here, and from here you can see automatically this is your impulsive move, and this is way beyond that 45 pips mark that I always look for. So before you search for entries, or before you search for that entry pattern, what you have to do is that you have to wait for 40 pip retracement, because you can see here that this impulsive move is more than 45 pips. So let's measure this move here and we see if it has reached 40 pips. Actually, let's see if it has reached 40 pips. So actually putting this, you can see I drew this from here up to here down. Let's put this 40 pips. There is 40 pips. If you put here from here up to here to where the 40 pip retracement is, you can see actually these candles, let's make them bigger so that you can see them well. You can see here this candle actually got to the 40 pips retracement that we actually search for. So from here, that gives us a go ahead. Let's put it well. Yes, they're up. That gives us a go ahead that we can actually search for entries there. So from here, you can see, and also you need to see the time. The time that I always look for entry is at 5 GMT plus 2 to 7 GMT plus 2. So you can see here, this is 4:45. Let's go to another candle. Yeah, there is 5. But then from here, you can see we already have a W pattern. Remember, a W pattern is made up of 4 candles: down, down, and up. So you can see here we have down, we have up, we have down, and we have up. So this is our W pattern already. So from here, automatically you can see our neckline is somewhere here down. So we put here the neckline, and then what we do is we go to the 1 hour. We go to the 1 hour time frame. If you go to the 1 hour time frame here, you can see that this candle here, the previous candle here is 5, so the previous candle is between 4 to 5, should have been bullish. But you can see here, this from 4 to 5, this candle is bearish. So we have to wait for this candle for us to actually look for entries. So that's automatically our trades at the neckline at exactly from 5 to 6. But it's not necessarily 5 to 6. It's just that we have to wait for this candle to actually close. So we go to the M15 and we wait. Let's go to the M1 again. This one was 5 to 6, so it's between 6 to 7. So let's between 6. So here we'll not be looking forward to enter for any entries or to place any entries there. Let's see our tool. We're buying. Remember, we're using a 15 pips stop loss and a 45 pips take profit. So yeah, from there, let's see. This is still 5. We're entering at 6. This is 5:15. We have not yet set our entry. 5:30 and we have 5:45. So from a candle at 6, that's when we are looking forward to enter in the trade. So let's just place an entry there. Right now we can actually place an entry. Our buy limit, we are risking 1% and we enter from there. Let's see if we're going to get triggered in. Not yet in the trade. There. So this candle actually triggers us in the trade. And you remember, if you're an OG in this channel, we always go break even after a 20 pips retracement move. So let's measure that from here down, 20 pips in profit. Let me edit that there. So let's see if we're going to go break even. Let me put it down here. Yes, down here. There. Let's see. Okay, so we were in a small drawdown, but now you can see that price actually went up in profit, and there we're going to go break even. So in this platform, to go break even, you just click on here, then you can see there the trade now is in break even. So the outcome of this trade is 2. You can either this trade can either end in break even or take profit. So let's see how this trade will actually end. Like, let's put it here, and there the trade has already hit take profit, and you can see here we secured 3R because you are risking 1% to get 3%, and you are risking 15 pips to get 45 pips. So that is automatically 3R trade. So from this trade, you can see we already have 3R. So right now what we do is we go to the calendar and we see which days are valid, because you can see here this at 8th, this was a trade that was actually valid. We will not be trading 9th because after a profitable day like this, we wait for 1 day and then we trade on another day. So this is 8th, 9th will not be trading. Let's see if 10th is actually a valid day to trade. Coming to the calendar here, you can see that 10th is not a valid trading day because we have USD CPI. If we have USD CPI or USD PPI, we just stay out. So this is invalid day to trade. This is invalid day to trade, and we don't trade Fridays. So the only valid day that was here valid, it was on Monday, May 15th. So let's go on Monday, May 15th, and we see if our daily time frame is actually checked out, so that we can go to the lower time frames to search for entries. So here you can see we're on the daily time frame, and the good thing about fxreplay, you can see that you can even journal your trade. So if you wanted to journal, you can actually do that, and it also gives you the data and the analytics after you're done. So let's go on with our backtesting. You can see here that we are looking forward to trade on Monday, May 15th. To trade on Monday, May 15th, remember the candle on Friday, which is 12th May, should have closed bullish. And you can see from here that this candle actually closed bullish. So that gives us as a go ahead to go in lower time frames and actually search for an entry. Let's go in May 15th. No, let's go in 15th minutes time frame and actually search for an entry. Going to the M15 time frame, remember what you always do is that you measure the impulsive move, so that after knowing the impulsive move, you wait for the retracement. So when you're waiting for the retracement, that's when you're waiting for the price to actually be cheap or to come for the discount before you can actually buy. Because you can see here, the price is very high and you cannot be selling high. You can only sell high but not buy high. You buy low and you sell high. So that's why after that 45 pip retracement has been made, what you do is you wait for that 40 pip retracement. That 40 pip retracement that you're actually waiting for, that is what we call price actually coming back to discount before you can actually look forward to buy entry. So here, let's measure the impulsive move from here down to here up. You can see this is way beyond that 45 pip mark. So what you do again, you draw your 45 pip retracement. Let's see here. if you're going to, yes, there is a swing high. Let's get here this, so that we can actually wait for 40 pip retracement, and you see if you're going to get it. Remember, we're going to stop searching for entries at exactly 7, so it's somewhere here down. Okay, there we're not getting any retracements, we're not getting that 40 retracement, so it means we're not going to. You wait here for a 40 pips retracement, and you can see here we do not have that 40 pip retracement yet. Let's see if we're going to get that. And here, let's see if this is 40 pip retracement. Let's see, let's zoom so that we can see all of that. Yes, this is a 40 pip retracement, but then are we going to get that W that we're actually looking for? The W is here, but then this W is very big, so it's not something that we can actually look for entries there. So yeah, and there the day just goes like that, because we had another W here, but then it did not actually retrace back. So on this day we will not have any entries. Let's go and see if 16th May is actually a valid day to trade. See here, when it comes to 16th May, this is not a valid day to trade because you can see we have CPI, so we'll be staying out of this day. The only valid day that we have here after 16th May is 17th May and 18th May. So let's go to the charts and we actually search for entries on 17th May. Coming to the daily, you can see here we're looking forward to trade on the 17th May, and actually the candle before that, you can see here it's bullish. That gives us a go ahead that 17th May is actually a valid day to trade. So let's go in the lower time frames and search for entry. Here on the 15 minutes time frame, you can see that we have this swing low and this swing high. So let's measure that impulsive move. Measure it here from this swing low to swing high. Yes, and you can see there this is more than 19, it's more than 45 pips. Let's see if it actually got that 40 pips that we actually wait for. Let's take this here and put it from the high there to the 40 pips mark. You can see this is way, it actually already gave the 40 pips retracement, so we can search for an entry at 5, because here we're not 5 yet. Wait for that 5 mark. There we already have 5, and just go for the 1 hour time frame and you see if the one hour rule was respected. I'm giving you that challenge, go and see. But then here you can see we already have the W pattern, so our entry, let's mark that neckline. So you can see here this is where our neckline is, here down this is where our neckline is. So we'll be setting our entry here down, and we'll be setting there. Right, I think it already touched it, but then since we are late, let's see if it will actually come back. Hold down. Yeah, but then let's set in that 20 pips retracement, so that if it makes that 20 pips retracement, we just delete that entry because it will no longer be valid, because we're looking forward to enter at exactly that neckline. So if it goes to 20 pips already, we'll not be looking forward to enter at that entry there. So you can see this already touched the 20 pip retracement, the 20 pips moving profit. So let's just cancel this, it's no longer needed, because if this goes back here, it will just be a break even, and a break even, it means you do not have to actually have an entry there. Let's see if this actually goes back. It won't, most probably it will go, yeah, this trade would have been stopped in break even, but then we have another W pattern here. But then with this, you can see it does not, the previous candle here was red, so it means anytime here from 10 to 11, we are not looking forward to enter on that time. So if you get neckline retracement from 10 to 11, we'll not be looking forward to enter. And if you see here in the M15, we got a retracement from around like this. It was at 10:15. You can see that it falls between 10 to 11 time window. So this would have not gotten an entry here, because that is not the time we are looking forward to enter trades at exactly from 11 to 12. And you can see here from that 11 to 12, it did not come back to the neckline to actually give us an entry there. You can see it just went on with the move, it did not really come back, so we are not looking forward enter on this kind of a trade. But then you can see if you would have held without setting break even, the trade would have gone. But then since we have backtested this data, and we have data that when it goes to 20 pips, we have to set break even, because there is a higher chance if it goes back, there's like higher chance for the trade to actually go back to the stop loss. This kind of trades will happen, but then it's always good to be on the safe side and to always work with the data that you have. So let's go on here. let's see another day. The following day will be 18th May, and 18th May, let's see if 18th May is actually a valid day to trade. You can see here on the calendar that 18th May is actually a valid day to trade. Let's go on the daily time frame and you see if our daily time frame rule actually gets checked out. If you go to the daily, you can see that we're looking forward to trade on the 18th May. So the candle before 18th May should have closed bullish, and from the looks here you can see this candle is actually closed bullish. So let's go in the lower time frames and search one entry. We're here on the M15, and you can see here in the 15 minutes time frame, what you always do, like always, measure the impulsive move from the swing low, the swing high. You can see here we have more than 45 pip retracement. So remember what you always do. What is it? Comment that in the comment section, but it's very easy. We wait for that 40 pip retracement, and you see here we have it. We draw it from here up where the price is, because we want to see if the 40 pip retracement has been respected. And you can see here we already have the 14 pips retracement, but then we have not yet. It's still 3:30. Let's go to 5, because that's when we look forward for entries, and there we already have 5. And from here, remember we are searching for our W pattern, and from here you can see we have up, down, and up. So this is our W pattern, and our neckline is here. So this is where we're going to search for our entry. But always remember to go to the H1 time frame. Just go to the H1 time frame and you see if that rule is respected. If you're not really understanding this, you can go to my Telegram, send me a text and ask me how this rule works, because I can see it's very challenging to many people. So just if you have a problem with that, and if you have not actually understood it from the other episode that I've released, yeah, send me a text and I will help. But then from here, our entry will be from here. Let's set in from here. Yeah, from here down to here up. So let's set this in. We're going to place our order there. We'll be waiting for a retracement. Yeah, so let's see. There, we're ready in the trade. Let's first see this 20 pip thing. Let's put it here so that we know where to place our break even, where to place our trade in break even. Okay, let's see. It was very close to touch the stop loss, but now it's back in profit. So there we already have the 20 pip retracement mark. So let's set this to break even. Right now it's in break even. Let's see if it's going to touch our take profit. This is just a retracement. Let's see. There, so you can see we already have that 3R profit in this trade. So you can see here so far we have 6%. We only had 2 trades in the whole month and they were all take profit. So let's see if 19th May is actually a valid trading day, but it's not valid because we have already hit take profit on the 18th of May. So let's see if 20th May is actually a valid trading day according to the calendar. Going to the calendar, you can see 20th May is actually on Saturday. So the only day that you're looking forward to trade is starting on Monday. It's starting on Monday here. And you can see on Monday we have card holidays. And most of the times when you have a holiday for either card or JPY, I don't look for trades on that day. So this is not a valid day to trade. The only valid day to trade here is either May 23rd, May 24th, or May 25th. Let's see here if any of these days, if it's actually valid. But after ticking off calendar, right now we go to the daily and we see if daily actually gives us a go ahead. You can see here that we're looking forward to trade on 23rd, and Monday this candle is actually bullish, so we can actually go in lower time and search for entries there. Coming the M15, we're trading on 20. We are looking forward to trade on the 23rd, and you can see here we have a very big impulse move. Let's see, starting from here down. This is more than 45 pips, so we'll only be looking to enter this trade on 23rd after 40 pips retracement. But then the 40 pips retracement should not be really close to this high, because you can see this high is very close, and then if we actually enter a trade here, there's a higher chance of our trade to hit stop loss, because it will hit this order block here and actually go down. So personally, I prefer this trade to actually be down here. let's see if we have that retracement. Okay, so here we have that retracement here down, but then this is way more down. And when I get something like this, I do not really look forward to enter on this trade, because you can see it still reacted on this order block here. Maybe if it would have closed above this order block, then I would be looking forward to enter. So this automatically makes this day an invalid day for me to trade, because this move here actually reacted on this order block. So I don't really look forward to trade there, though if you look at it, this actually went up, but then I have backtested many scenarios of this trade actually ending up in a loss. So I would rather stay out of this, since this day is actually an invalid day to trade. Let's see if 24th is actually a valid day. So if you go in the calendar here, the 24th, it has FOMC, so this day is actually an invalid day to trade. Let's see if Thursday, May 25th, let's see if this day it's actually a valid day to trade. Let's go in daily and you see if this day is valid. Going to the calendar, you can see here 25th May is not a valid day to trade, because this 24th May here, it closed bearish, so this automatically cancels this day to be a valid trading day. Let's go to the calendar again and we see which day is valid after the 25th. Coming here to the calendar, you can see 25th was the last valid day in this week here, and we don't trade Fridays, so the only day that we'll be looking forward to trade is Monday 29th. But you can see here from Monday 29th to June 2nd, this day is the NFP week, so that automatically cancels this whole week to be a valid trading day. So we'll not be really looking forward to trade on this whole week, and that will be the last days of our trading day. So let's go to the charts and we see how the analytics were actually turned out. So here, let's go to the analytics. That's why I like fxreplay, because at the end of the day it shows you all your analytics. So yes, let's go to the analytics and you see. Yeah, so from here you can see that we made 6k, and from here we have a 100 win rate, but then that is because we only had 2 trades, and then you cannot say your strategy here or your strategy as a whole is 100%, because you're only dealing with 2 trades, and that is a really low data for you to make your decisions on. So from here you can see, because we only had 2 trades in the whole month, this is how our equity curve actually was. We made 6%. Our ideal average RR is actually 4.9. Our risk to reward ratio is 3, but then we do not have any losses. That's why it's showing 3. And in all those trades, our average holding duration was 6 hours and 18 seconds. But then most of the times, this having only 2 trades, the data, you cannot really make any decisions when it comes to the data when you work with only 2 trades. So most of the times, try to do your backtest maybe here in fxreplay. Make sure you use more than one month. Maybe do for the whole year. Then you see what is your average duration of a trade, your average RR, your ideal holding time, and all that. Then that is the only time fxreplay will give you good data that you actually need. I will actually put the link down on my description so that you see this fxreplay, and you can also use it because it's a very good tool. So yeah, this is all for this backtesting session video. Watch the videos that are here from January to this month. Try and you learn a lot, everything from the start, me analyzing the trade from the calendar to the entry. You all find in all the backtesting videos, you will actually find there. Then after that, you will see in my challenge, because this is exactly the strategy that I use when it comes to my challenge series. So don't forget to subscribe, don't forget to like, and don't forget to share too. So until next time, it's the Rwandan Trader. Bye.